Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is Market Today, the show where we will be helping you understand the closing action on the day straight. Remember, we've actually had a good week thus far. Today again, there was an attempt towards 26,000 and we have seen some selling pressure right after. But we're still holding up just above the flat line at this point. 25,880 is with us on the markets. A lot of sectors like Pharma, Realty, Metals, Infra, they are contributing to the gains. But we have seen some profit taking also on heavyweight sectors like say IT for instance. We've also seen autos, broader markets also climb down. PSU banks, after days of a positive move, we're also seeing some gains getting underway as far as the markets are concerned. But there are a lot of earnings reactions that you're seeing as far as specific stock momentum is seeing. There is a lot of action to really focus on right now. But let's actually get into a conversation with our market master. We have Sharmila Joshi, market expert, joining in to share with us the views on the markets and the outlook going forward. Good afternoon, Sharmila. Good to have you as always. Well, how are you looking at this fresh wave of momentum that's again making an attempt and a dash towards 26,000? Tomorrow is again the elections day. Do you think tomorrow elections and an all-time high could coincide?
Listening to you say that we are sort of making an attempt towards 26,000 and then correcting. And you know what I've observed often when that kind of thing happens, when you're building up to, you keep correcting from that level. So when that level is finally taken out, I think then you will sort of go up very fast from there, because that is what happens, because you've been consolidating so much at this level. That I think when that 26,000 finally happens, then we will see like a very good up move from there. So fingers crossed. Let's hope that. Personally, I'm not banking too much on election results or outcomes, because those I think are short term. I think what is happening is that we are recognizing that earnings, at least in some sectors, are better than what we had thought, and overall they sort of indicate that things could get better going ahead. Now the missing piece in the puzzle seems to be when will FIs return to buying, and I think maybe that as well as some sort of certainty on the US front could provide us with the next leg up.
Absolutely. So since you talked about the earnings, we're just at the fag end. I mean, just about wrapping today and tomorrow, the last set of earnings that will be coming in. What sort of earnings upgrades and downgrades that you've done at the end of Q2?
I think one clear winner has been Asian Paints, and we all know the kind of pain that we saw in the kind of news of competitors coming in, as well as Asian Paints always got a premium valuation as compared to other paint makers. They lost that. Their numbers were a little awry in between. But now they seem to be back with a bang, because I think the numbers seem to indicate that in a bad quarter they've done very good numbers. And the growth has not come at any price cut or anything, because the margins are also extremely healthy. So I think that's a very good signal for Asian Paints. As well as I think autos. In autos, I think maybe one or two numbers were slightly indifferent, but by and large we've had really a good set of numbers across the board sort of. This coupled with the fact that the GST cut will mean good things for them even going ahead, seems to put this in a very sweet spot, as a sector. Whether it's two-wheelers, whether it's four-wheeler passenger vehicles, hopefully commercial vehicles will also soon join the, in terms of the good numbers reporting. But overall, I think.
Okay. So, Sharmila, also help us understand when it comes to the downgrades. Do you see the earnings downgrade cycle is perhaps over with the kind of better numbers that we've started to get in many pockets now? Do you see at least earnings downgrade season now getting behind us? All right, I think we've lost the connection with Sharmila. We'll try to get her back into the conversation as far as to understand what does it mean for the earnings downgrade cycle so far. We've been seeing quarter after quarter a lot of downgrades that were taking place. Is that now getting behind us, after Q2?
It seems so, and that is what I meant. I think even when numbers were bad, there were certain reasons why the numbers were sort of why they missed the number, and it seemed to suggest that going forward things will get better. So overall, as I said, that for me perhaps is the most positive sign for the market.
Okay, got that. Also wanted to understand from you, there is so much of focus on the new age companies this time. You know, look at Mama Earth, how it's shot up 9-10% odd in trade today. These were coupled with this Paytm, PB Fintech, maybe even Nykaa. All of these stocks have had a very volatile past. Quarter after quarter, we were assessing whether the company is actually falling back into the line, whether profitability is still the aim, or is it still on a cash burning stage. After the end of Q2, how have you assessed these new age tech companies? Are they finally coming out of their worst period, and are they finally focusing on what the street likes, seeing profitability, sustained momentum on the margins, and focus on growth?
Absolutely, and I will split this sort of answer into one is of
Sure.
course the new age company like Eternal or Swiggy or Paytm, etc. Which according to me, when you look at the addressable market, it's very large, and we are sort of just getting started. Especially when you are talking of Eternal and that Blinkit model with
Yeah.
Swiggy, etc. Because this will now spread to. We only have their presence in a sort of a meaningful way in the main metros.
Yeah.
But you will slowly see tier 2, tier 3 sort of cities also join in the fray, and I think that addressable market is very large. So that I think you with that you should also keep focus on some of the delivery companies, the logistic companies, because those also stand to gain when an Amazon goes up, when a Flipkart does more sales, you will obviously see changes there also. Then
Yeah.
I think another pocket, according to me, which is important and which market is not really taking too seriously is the fact that the kind of market share that a Nykaa can have, like a Fonasa can have, like a Trent can have, because I think we are seeing women shop more, and online shopping has made things simpler, and we are spending more on Indian brands, according to me, are killing it, and we are spending more on whether it's cosmetics, whether it's clothes, and I think these companies, people will argue that the valuations are a little high, but according to me, all of them have a good growth going ahead.
Okay, fair point. Now, Sharmila, when we also come to the sectors that are still to pick up pace, would you be able to mark out a few certain sectors that you still believe have some more quarters to go before they finally start to seeing the green shoots?
I think in the mid caps there would be a lot of individual stocks because I don't think that manufacturing and a lot of capital good market companies etc. have joined the fray. A lot of commodity stocks are sort of languishing in a
Yeah.
soft commodity. So hopefully we will see, but think different things react at different points in time. So I don't think that unless you have that like a big blowout bull run where everything goes up, I
Yeah.
think sectors will sort of take turns to perform.
Right. Since you talked about the mid caps, it's the mid cap sector that has outperformed the large caps with about a 6.5% kind of a move this year. And this middle order has actually hit the fresh record highs also, with Sensex and Nifty still trailing. What is the best approach right now on the mid caps that you have?
So this is where the difficulty is, because I think that while the index seems to indicate that it has
Yeah.
outperformed, if you actually compare stock prices to what really went up in the last sort of bull run that we had, the highest levels that we had, then you'll find that a lot of stocks are at significantly lower levels. So the sort of buying has changed. We know it has gone to financials. We know it has gone to certain sectors. But there are good stocks even within the mid cap space which are still sort of which have fallen off from their highs, and maybe some kind of they could be like very niche plays, etc. And so now they're ignored. But the numbers are not bad. So the point being that they will slowly sort of start coming into their own, and hopefully then that's when the sort of market rally becomes more broad based, when you see more and more mid caps sort of
True.
coming into their own.
Absolutely. Let's focus on a bit of stocks as well that are getting into focus. Remember, viewers, today we'll also focus a bit on the IT pack. IT stocks who have been up and about for the last couple of sessions. Today they've seen some profit taking. But before taking the overall view on IT stocks, I want to talk about Infosys. For all the viewers who are watching the show, remember today is the last day for buying Infosys shares in case you want to participate in the buyback that opens tomorrow for the company. the largest ever buyback in history of Infosys that they are opening up. Of course, we will get to know the details of the window of tendering of the shares, etc. But definitely, they've announced the prices as well of 1800 rupees per share. Right now, the stock is somewhere around 1543. But only if you have the stock reflected in your demat account tomorrow will you be eligible to participate in this buyback as well. Sharmila, to you, for our viewers to understand this, how are you assessing this opportunity on the largest ever buyback for Infosys?
Buyback is in a sense always always good news because it's sort of and the price that they're doing it at. Because this is a sector that's been through a lot of pain over the last year and a half for all the known reasons. But that said, if you believe that your value should be at 1800, which is what the company is saying, which is higher than the price it's trading at in the market, then it's always a sort of a vote for of confidence in their stock. So, and this is the largest ever buyback. So, in that sense, it's definitely good news. And yes, I mean, I think it's one of those sort of moves that companies make when they have the cash and their stock price does not reflect what they think their intrinsic value should be.
Okay. So, for those investors who are looking to buy this gap, they're already looking at a 15% kind of a premium, kind of gain that they could look at when they tender their shares in the buyback. But the other aspect is understanding the taxation bit. Yes, you swiftly look at that gain of 250, 300 rupees odd per share that you are likely to earn. But on this premium, because buybacks are now also taxed as dividends and not just as LTCG and STCG, could you explain to our viewers how much of it does it really truly make sense?
Yeah, so in fact, I was just about to say that, when you were saying that today is the last day, because I think at this point in time, it really makes a lot of sense only for those who are in the sort of the lowest IT bracket, for them to go ahead and buy at this level. So excuse me. So for I think that sort of explains the IT the taxation angle, because if you are paying, if you're in any of the higher income brackets,
if you're in 30% bracket, then you are any which ways paying higher. Yeah. Only if you are like, say, if you have a salary bracket where you actually don't have too much of taxes there, then it would probably make sense. So that's the clarity that Sharmila is giving you, because otherwise in stock markets you tend to pay either STCG or LTCG, that's 12.5% or 20% at large. But in case you're in a high tax bracket, you straight away will have to pay as per your tax bracket on the gain that you earn there. So look at all that aspect there, and of course we will get to know the aspect ratio, all of those things. And now, Sharmila, could you give us an overview on the IT sector as well as a whole?
Yeah, so I think here it's a little tricky for me, very honestly, because yes, I think that things have settled in the sense that the kind of headwinds that we had from the US, etc., seem to be settled. But I think one of the bigger challenges that we're going to face going ahead is that how much are we really invested in AI as a sector, and where are we really? Where are these companies where that is concerned? Because very clearly we don't have an NVIDIA, which is a pure AI play. We don't have any company like that in India, and all the major IT companies, meaning the big names, TCS, etc., they tend to invest in all the upcoming sort of. So they have made investments in AI. But that said, I don't think it's enough, and according to me, this could. I mean, I think it's time we sort of really focused on that, and that's what I would really like to see, where companies really come out and spell out their strategy as to how they are going to approach this. Because I think this is something that is going to impact us far more than we realize at a far faster speed.
Okay, fair point. That's as far as the IT space is concerned, viewers, and we've discussed the Infosys buyback as well. Let's also focus on another aspect, and that is with respect to Adani Enterprises. The stock always, has been in focus for the last couple of sessions. It rallied also because of the 25,000 crore rupees rights issue plan that the company has focused on, the price set at 1800 rupees per share. And of course, the record date for determining eligible shareholders is Monday, that's November 17, 2025. So let's focus a bit on that as well. In this case, what are the aspects that investors must remember when they're looking at and participating in this rights issue?
Well, very honestly, within all their listed companies, probably I think Adani Enterprise and a couple of other plays are the sort of stocks that I like within the listed groups in the Adani company, Adani group. And so, in the sense that it's unfortunately been a sort of a more news-driven kind of play, but we shouldn't forget the fact that they did start out to be sort of disruptors in the infrastructure play,
Yeah.
and a lot of that is reflected in Adani Enterprise. So in that sense, I think that this is something that existing shareholders should consider, because I think like there's been enough water under the bridge now, and definitely I think a rights issue is of value to existing shareholders.
Okay, fair point. And on the overall Adani group of stocks, the kind of earnings that have come in, do they give you any hope that one should participate now? Is there any opportunity in the offing in the near to medium term? Or do you think it's rather to be looked at as a consolidative space, and therefore maybe a better idea in case you want to participate in the story is by way of SIPs and select stocks here?
Yes, in any case, I think SIP is a bit better approach because because of the way markets have been really more than anything.
Yeah.
But that said, yes, I think if you were then to look at their individual companies, probably companies like Adani Enterprise, the
Yeah.
Adani Ports, maybe one of the cement plays, those could be the stocks in your list to sort of start investing small amounts in.
Okay, got that. Let me also actually bring up, while we are discussing these large caps and the opportunities in the secondary market, so much of focus has been on the primary market as well. Sharmila, we've had, Lens Carts this week, we've had Grow, we've had Physics Wala, Pine Labs, we've had just enough and more opportunities that investors can even, keep a tab on as to which IPO is opening and closing which day. Every day it's something else that you need to focus on. Tenneco Clean Air, so many of them that are in focus. Any IPO that has actually caught your attention? Grow, of course, after listing has been seeing a substantial move for the last couple of sessions there. Even in the listed sphere, do you see any opportunities in any of these?
So, one advice I would really give is that once a stock, if you haven't got it at IPO price, just wait it out for 3 months before you buy the stock. So let all the noise sort of settle, those who want to exit, enter, etc., and then look at a stock. Having said that, I like Grow because I think the way they have Grow has grown their business, as well as the fact that their income stream is without any F&O, and the way they are concentrating on first-time investors, etc., make this a very attractive stock. And if you really look at even what is happening in the secondary market, you will find that as markets have sort of begun to rally, you will find everything that is capital market facing has begun to move, and in fact, some of the numbers there also have been attractive. So all that said, I think Grow could be an interesting IPO to watch. But as I said, now that it is listed, give it time, and maybe after 2 or 3 months, look to enter.
Okay, fair point. Another space that we can watch out for is the auto pack, and of course a lot of action there as well. You also pointed out autos is something that you're watching out for. Yesterday we did see Tata Motors CV making its debut on the stock markets too. Now when we talk about Tata Motors, it's of course one of the highly held stocks by investors, retail investors at large. This year so far the consolidated business and the way the stock prices performed was rather towards the disappointing side, but the year before we had seen a one-way rally there. Now, when we see two separate businesses getting listed on the stock markets and the opportunities that both these companies will present, how are you advising investors to look forward to not one but two Tata Motors stocks to choose from now?
Yes, so I think that simply put, CV as a cycle moves slower. But when it moves, it's far more sticky. So I think that in that sense, between the two businesses, because the passenger vehicle business also has the international businesses in their portfolio, that sort of makes it a slightly more riskier business because there are many more moving parts. So it will actually, frankly, depend on the kind of market that you're in to decide which of the two to invest in. Because at the end of the day, Tata Motors Commercial Vehicles is your sort of premier commercial vehicle maker in the country. So to my mind, that is probably a more safer play than passenger vehicles. Passenger vehicles at the moment looks a little more risky because of the fact of everything that is happening with the Range Rover and Jaguar, etc., and how their sales will get impacted going ahead. But if you were to see that cycle actually starting to pick up again, then perhaps that could be the stock to also add to your portfolio, because having, I think it's a very, very good stock. As a disclosure, I own both. I'm not selling either. But at the moment, commercial vehicles, as I said, seems a little safer.
Okay, fair point. Any other stocks within the auto basket, four-wheelers or two-wheelers that you currently like?
Definitely. I think I like Ashok Leyland. We've seen a very good set of numbers from Ashok
Yes.
Leyland. They are also making an investment in electric batteries. That again is a very good foray. Within the three two-wheeler stocks that we have, actually I like all three. They're all three great companies. Perhaps at this point in time, in terms of valuations and sort of recovery, I prefer Hero Motors. I own TVS Motors, but at this price point, I prefer Hero Motors. But really speaking, honestly, I think if you were to buy any of these, I think you wouldn't lose money from the current price. And again, I think Mahindra and Mahindra gave an excellent set of numbers, so that's another stock that can be looked at. It's run up, so wait a bit on that. But as I said, this is one sector that has really given good numbers across the board, and good things are happening for each of the individual companies.
Absolutely. Aisha has also come out with the numbers. A profit of 1369 odd crores, revenue of 6176 odd crore rupees as well. What we're also seeing this is almost in tandem with the street estimates. Margins have come in at 24.5%. There's a slight lower number on the profit vis-a-vis the street estimates. They were somewhere around 1400 odd crores. It's coming at 1350. Revenue again has come in almost in line, 6176 odd crore rupees. EBITDA also at 1513 odd crore rupees seems to be just in line there. So profit has jumped by 24% odd, but we have seen an EBITDA also improved by 39% when we talk about year on year space. The stock is lower by 1%. Let's try and understand what's happened here. Sharmila, how do you assess Aisha Motors?
So yes, I think, as you said, a couple of numbers seem off, but overall, I think if you were to see the numbers against the kind of scenario that we are in, then I think it's a fair set of numbers. And going ahead, I'm sure they'll build on it. In that sense, a little neutral in the pure from a purely number sort of perspective. But overall, as a company, again, I think this is a stock that one can look at from an investment perspective.
Okay, fair point. I hope this has also helped our viewers out there to focus on this space. One space that we haven't discussed is banking, so let's focus on that too. I'll start off with the PSU banks first, Sharmila, because that seems to be in flavor in the last couple of sessions. There's been a lot of momentum there. Of course, everybody's talking about 2 or 3 triggers that could keep PSU banks in focus in the near to medium term till the time these announcements come. One is what the government has already hinted at. Finance Minister has talked about how we need to have larger, more banks that can be seen on a world stage, competitive as world banks as well. Now we could see we have 12 banks. They've already come down from a number of 23, but there could be probably more merger and consolidation there. Secondly, there could also be a talk about how foreign ownership could surge from here, and that's another trigger everybody's watching out for. After a gap of consolidation, do you think now is the right time to again start betting big on the PSU banks?
Well, as you said, clearly the momentum seems to be with the public sector banks, because, in fact, the private banks have been sort of holding the index back. That said, I think, I would still go with some of the larger PSU names. Yes, I do agree that foreign ownership and merger news, etc., could drive some of the smaller banks. But, these are unless you know something for a fact that, okay, this is now happening, this bank is seriously looking at this bank, or they're seriously looking to restructure, then I think, you could invest in it as a very long-term play. Because, let's not forget that these, even if you were to see an announcement today, for it to actually take place, you could see a number of months go by before things finally fall into place. So from that perspective, just from the fact that we have a scenario where things are looking up for banking as a sector in terms of their actual business, I prefer some of the larger PSU banks like a PNB or a Bank of India or a Bank of Baroda. But that said, if you have the smaller names at this point, I think, as you said, because there are so many triggers waiting to play out, if you have them, just continue to hold them. don't, even if they're below your sort of stock price, because definitely there seems to be something cooking within the space, and that's what actually, that's the long game people are playing for.
Absolutely. And what about the private banks and NBFCs? Are you keeping your eye out on some certain select stocks from there, or is PSU banks a better one space to be in?
So from a near-term return perspective, I think definitely PSU banks. But that said, if you ask me whether it's an HDFC bank or an ICICI bank, definitely I think they should be in your portfolio. Again, I'm not talking of SBI because, to my mind, these are your sort of portfolio plays.
Yeah.
We've recently had IndusInd Bank, which has gotten clearance, so maybe things could look better for them as well. Even within the NBFCs, both the Bajaj twins are, I think, doing a great job. Those could be looked at. I think Geo Finance could be another. Most of the stocks actually within the NBFC space, AV Capital, they've all really delivered good numbers and have been very strong this last year or so. So definitely all of them warrant a look.
Okay, fair point. Towards the end, I wanted to also focus on defense that started to move this entire week. It's been panned out a good one for the defense stocks as well. Again, announcements on order flows and big R&D spends that the government has indicated led to a pull up. Yesterday and today there was some profit taking, but before that the stocks were on a move. You can see even today some of the stocks like Data Patterns that have moved up sharply, but Cochin has given up about 4.5% odd. Is it still a momentum play? How are you looking at the defense stocks?
So again, what I feel is that the kind of world that we live in today, these stocks are going to find relevance every maybe year and a half, and then everybody will once again be that's the sector you need to focus on, etc. That said, I think we have had some very clear indications that the spend is going to be up, which is why we are seeing a lot of buying come into some of the defense plays. And once again, I think if you look at the order books of some of these shipbuilding companies, then those are very attractive again. Those orders are again of a very long gestation period. So for them to reflect in your numbers, in your bottom line, it takes a while. That said, very healthy order books. That's always a very big positive for stocks. So to my mind, whether it's a BAL, whether it's a Cochin shipyard, whether it's a Mazgao dock, whether it's a Data Patterns, they're all sort of different but same in that sense. And all of them, I think, if you have them, I think you need to continue to hold them. They may not be a momentum sector for some time, which is again, I think, a good thing. Because if they're a momentum sector, it clearly means that the other things are going wrong for you. But that said, I don't think this is going to be a sector that's going to lose sort of complete flavor at any time soon.
Okay, fair point. Well, on that note, thank you so much, Sharmila, for being with us on the show and helping us understand and insight into a broad range of sectors and opportunities we've discussed today. Always a pleasure to host you. Thank you. All right, viewers, we'll start to wrap up. It's 2 minutes to go before the markets shut shop for today. 25,878. So we have come off the high point of the day and we are now just absolutely flat, trying to find out whether we will close in the green, continuing with the move that we've been seeing all across this week and all days there. But in terms of sectors, metals were shining bright, the top moving space. You can see even Pharma that picked up pace towards the end, about 0.5% higher. Infra stocks also up by about 0.5%. Real estate up by about 0.5%. These were the top 3 or 4 sectors that moved up, despite the fact that India VIX is also higher by 0.2%. Other than that, it was the banks, private banks, financial services that moved up. PSU banks that we were discussing have seen profit taking today, down by 0.6%. IT stocks down, oil and gas down, FMCG and broader markets. Mid and small caps have also ended the day lower in trade. On the Nifty, Asian Paints post earnings 2 days in a row, smart move there. You can see another 4% of a rally and 2880 kind of levels coming in on Asian Paints. Sharmila also marked out that this has been one of the key spaces that she would look as a potential earnings upgrade for. Hindalco, ICICI Bank, Indigo, all of these stocks also moved up smartly. Bajaj Finserv, Bharat Electronics, another 1% kind of move for all of these stocks today. On the lower end, however, we could see names like Eternal today down by about 3.6% in trade at the day's low for Eternal shares today. Eicher Motors down by 1.2%, BEL, Coal India, Infosys down by about 0.7% each. Let's talk about the gainers and the laggards there. Precision Wires moved up in trade 17% higher today at 270 odd levels, coming in very strong. You also had names like TVS Electronics, Salzer Electronics, Nectar Life Sciences 12 to 13% higher. Names even like you could mark out Gokul Agro Resources up by about 9 odd percent in trade. Names like Infibeam Avenues, Goldium International moved up in trade today. Names like Data Patterns 7% higher. Also Hemisphere Properties moved up. So all of these select names from Nifty 500 basket did have a strong showing, high single digits to even high double digits kind of moves that we saw in trade today. Alright, so the markets have shut sharp 9 points higher, just saving the blushes 25,884 for the Nifty towards the closing end. We will just wrap up right here, viewers, but do stay tuned with us onto Business Today Television. Tomorrow again is a very important day for the markets as Bihar election results come in, and that will also impact the mood of the market. So tomorrow morning is when we will have to keep an eye out on as to how the Gift Nifty points out, and of course how the markets trade tomorrow as well. So stay tuned with us. Even beyond the market hours today, you will get to see a lot of coverage from the world of business and finance, and tomorrow we'll be back at 9 a.m. with all the market cues.
India's fight against obesity is picking up pace, and so is the competition in the weight loss drug market. Danish drug maker Novo Nordisk has slashed prices of its blockbuster therapy Wegovy by 37%, bringing